Welcome to the Swing Trading with Cycles channel. It is February 24th, 2023. We're going to do an update on precious metals, so gold, silver, the miners. If you're not following on Twitter, definitely take a look at the pinned comment. I've mentioned this in my tweet that gold and silver have almost retraced 50% of the rally from that September bottom, right? Like this is our bottom right here, right? So we had the move up like that. Like, I mean, let's just draw it to make sure we're all on the same page. So like this move here. So this, if we get down to here, that will be 50% of the move given back. And that's about another 2% down from here, from where we are. I mean, and just we're going to zoom in on the daily chart. This is your weekly chart right here. But it looks like we didn't have a daily cycle low after all. And so we're still declining into a daily cycle low, which is actually not a bad thing necessarily, because it means, you have a little bit of hope that you can have a multi-day rally after you get that low. So in terms of the weekly, it is week 21 right now. The top was on week 18. It was a big bearish outside weekly candle. So it was very obvious, glaring red lights. I put a poll on my Twitter, and 40% of people said that they were going to stay long. It hasn't been that bad a decline yet. And this 50% retracement level, that's not even a Fibonacci number. It's not actually a Fibonacci number, although people use it within that. I don't think those random numbers mean anything. The 50% is just a benchmark. It's like, okay, well, once you've given back half of the rally, now you're in danger of giving back too much, right? Like, you don't want to give back 80% of a rally, for instance. Obviously, you don't want to give back 100% because it means you'd be in a downtrend. And so it's just a good kind of line in the sand, just giving you a sense. And so so that's week 21, and for the daily cycle, it's actually day 81, so pretty late in the daily cycle. Although I'll remind, if we go all the way back to the last 8-year cycle low, which the working thesis is still that September was an 8-year cycle low, we still have to get below 1735 for that not to be the case. So we're still $100 above that. Although things, again, as we say, we want to look for, we want to be clear about which levels would be more bearish, right? And so you can see this daily cycle coming out of the last 8-year cycle low. So that was in December 2015. It actually topped on day 71, and it lasted 82 days. So it's actually not crazy that we're having such a long cycle, and that it's on, I guess, day 80 something. Doesn't mean we have to have the same length cycle by any means, but it just tells you, coming off of a major low, it's not surprising to have a really long cycle. I mean, this was a really long rally for 65 days. And again, you look at the structure here, we're still okay until we start breaking down, like, let's say here, like below these pivots. Then you're like in real trouble, because then you're at risk of breaking this down. And I mean, it could still rally from out of here. It would just be kind of ugly, sort of not ideal. And so that's gold. So day 81, super late in the daily cycle. And the other thing to really call out here is we have made a bearish outside monthly candle. That's so important to understand. Remember, we talked about how the weekly cycle decline was very like blinking red lights because it was a bearish outside weekly candle. Well, that bearish outside weekly candle had follow through to the downside, and it's now turned the monthly candle into a bearish outside candle. So again, it starts, and to be clear, it's this daily candle here that started it all, right? Big bearish outside daily candle on day 65, makes a higher high, also makes a lower low. That gives you your swing high. You have big follow through the next day. You have this little bear flag that breaks down. And so the presumption is that we would get one more daily cycle that takes us into the low, right? So like, let's just pretend we get the low today, right? You could see a world where we get another daily cycle that's like 25 days, maybe 30 something, that gives us a low around April or end of March, somewhere in that kind of timing band. And that stretches the weekly cycle out to another, maybe like 4 weeks, because again, we're on week 21. Silver tends to have a more regular cycle, and so if we look at that in terms of its weekly cycle being, a certain length, And so for silver, we're on week 24, and the weekly cycle tends to be, well, let's just make sure that's 22. No, it's actually week 25. I have to update that. So you can see weekly cycles tend to be around 27 to 26 weeks, like historically, but you can certainly have ones that are like 23 weeks, 21. This was a really short one at 14 weeks. This was a short, weird one at 18. And obviously this was really long at 31. And so it's entirely possible that we get our low actually in the next couple weeks. So that would be kind of the bull case here, that instead of stretching out into like, end of March, maybe we get our weekly cycle low in a couple weeks, like week 27, right? Where around the timing band where it normally makes a weekly cycle low. And that's what's helpful about cycles, is it kind of gives you a bit of a rubric. So we had a 22-week rally, and to be fair, it really kind of topped out on week 18. These last weeks were consolidation, and then it spiked up on week 22, made a bearish outside weekly candle. And so very possible that we have a weekly cycle low coming very soon. Again, it's week 25, so that's late in the weekly cycle. Look at this monthly candle though. Huge bearish outside monthly candle. And this pivot is what's at risk. That's a low at 1880. So that's the one that we're watching. And if we look at the quarterly chart, that would spell the real doomsday scenario if this quarterly candle became a bearish outside candle. Because it started with a daily candle, again, went to a weekly, a monthly, and now if it spreads to the quarterly, that would obviously be your ultimate bear signal. And that is below 1809. So call it around $18 even. And we're up here at like 21. So that's another $3 to the downside. So, and for silver, let's talk about where we are in the daily cycle. So, it looked like this was a daily cycle low. The really bearish interpretation is that this was a daily cycle low and we're just rolling over here. I don't think it really matters all that much, which scenario that is, because it's pretty clear that we're in a downtrend. But if we say that this was a shallow little weekly daily cycle low, that means this cycle topped out on day 53. So, and there are a few different interpretations here, I would say. Like there's a case to be made that, there's certainly a case to be made that we had another little daily cycle low within this, but we'll see. We'll talk about that. And gold has a really long daily cycle, so it's not surprising that silver is also stretching its daily cycle, like it's having this long kind of period. What I was saying is you could see a world where this was a daily cycle low, and then this was a little feeble rally, and this is a daily cycle high here. Again, that's just like that doesn't, that fine grained detail doesn't really matter all that much. What we know is that we're in a downtrend here. This is day 69 from this point, and we would fully expect that we're going to break below that low. I mean, look at that. There's no reason to assume that we won't get down there, because that's where we're heading, right? That's the way to think about it, that unless we get a bullish reversal, we're heading for this pivot here, this zone, call it $20.50. And below that, you really have this one big candle that's holding everything up. And so you find yourself at risk of going down here. Now, remember, we just talked about levels on the quarterly chart, on the monthly chart. It's all the same levels. You're just seeing different levels of structure on different time frames. That's why that multiple time frame analysis is so critical. And if we go to GDX, and just thinking about the retracement level, going back to the weekly chart. So silver's there. Yeah, silver made it. So silver has given back 50% of its rally. Again, gold would have to drop another 2% to give back 50% of the rally. That seems very likely. But if we don't get a bounce around that zone, then we look for maybe even a retest of that 1735 swing low. But this is something to watch. How deep does this go? How far does it stretch? So we're already down 15% from the top. And GDX, I've left the lines again from our last. That's, I think, it's through its 50% retracement and then some. And of course, it's Friday morning. Market hasn't opened yet. So where we are right now is actually just like we're gonna have a gap down opening, I imagine, given that the metals are given that gold is going lower right now in real time. Actually, we can see it's indicated to open around 26.93, and we closed at 27.78. Yeah, so definitely a nice little gap down opening. But you can see we've already given back 50% of the rally and then some, and now it's just sinking deeper. So that is something to watch. GDX is definitely underperforming, and we talk about the ratio. So we'll look at the ratio charts really quickly after that, and then we'll kind of call it. So we have our high on day 24. That's actually, is that day 25? Wait. Yeah, high on day 24, and this is day 44. So everything is in the middle of a sort of long cycle. We're going to see where that bounce goes. So that there was a thinking that we're going to get a daily cycle low here. Obviously, that didn't come to fruition. So maybe you see something like that. At this point, we're getting deeper and deeper. So you can see we took out this pivot the same way that silver is seeking out that pivot. It hasn't taken it out. GDX already did. Next logical area we're probably going to take out, and maybe that happens with this gap down opening. I think it actually probably will. Right, like this gap down opening takes out this pivot here. And then, again, it's all very similar. Now you're potentially talking about a move down to 25 if this can't hold, if it can't hold in this area. If we don't see sort of a like what you want to see today is some kind of hammer candle, right? That we make a new low, but then it just rallies back. I mean, obviously, the more furious, the better. So we're going to have to see. And if we look at those ratio charts, those are telling us something. We talk about how those will be good signals to really understand when we have a turning point. So like GDX to GLD, right? We can see that topped out on week 17. So it's week 18, 19, 20, 21. So we would expect when we get the turn in precious metals, this is going to turn as well. So we're watching this very closely. This is just additional confirmation, if you will. And if we think about the gold to silver ratio, man, look at this thing. So you would want this to turn down to be bullish precious metals. And just it's so let's just see how many weeks has it rallied so far. Just look at that. Just my goodness, 9 weeks, and just like one green week after another. Almost every week was a higher high. I mean, this was your exception, but it was a big hammer candle. And so silver has, and what this is telling you is that silver has just been getting walloped, but yet at the same time, we still have this swing high up here. And so that's the level that we're moving towards, 91.91. And if we look at the monthly chart, man, look at that. That's a violent reversal. Again, that's your swing high so far. So it's already threatening the monthly swing high in terms of getting back into that range. And so now we're going to see if it gets to the weekly, and then the last step will be the daily. So this is one to watch. What is this in terms of our daily cycle? Now we're going to the micro. Again, this is the gold to silver ratio. And so we're looking for this thing to turn down. It is, so that's the thing, right? Like that was probably a daily cycle low there. And so this is a new daily cycle, you call it. So it's day 17 right now of a new daily cycle probably. The other way to read it is that this is just one long daily cycle, the same way the rest of the PM complex is having one. Either way, again, this is that clean uptrend that you're seeing on the weekly. This is obviously just the daily version. So really important levels to watch here over the next few days and really over the next 2 days. And as February closes out and we see how March opens. But man, it's going to be do or die time for gold. And again, or for precious metals in general. I'll remind that monthly swing low that this thing all hinges on is right here. It's that 1735 level. That keeps September as a swing low. And you can see this thing looks like it wants to test that level. It's already taken out this pivot. Next step would be taking out this pivot. And once you've done that, the odds of breaking that are really high. And that pivot would be 1765. So, right, once you get to 1765, it's another $30 down. So that's the update on the precious metals complex. Important days to come. We will continue to watch here on this channel. Thanks for watching.